Okay, I think we will make a start. Thank you everyone for joining us. My name is Rebecca Moody and I run marketing here at Darwinium. My background is actually in product marketing, so I'm particularly interested in how things work, keeping up with the real world problems that fraud prevention products need to solve. And I also have a special interest in kind of industry trends and the current threat landscape and evolving attack typologies. So, this particular AI survey report is of great interest to me. Today, we're going to be running through the fraud survey, discussing some of the key themes, some of the surprising stats, and then we'll get a bit of a real world take on what this means for industry with our industry expert, John Ferrari. John, welcome. Thank you very much for joining us. Do you want to give us a quick introduction into you and your role at Apollo?
Sure thing. Thanks for having me, Rebecca. I'm John. I lead fraud and abuse prevention and application security at a SaaS company called Apollo.io. And I've been building these programs over a number of SaaS organizations over the last 14 years.
Awesome. Thank you very much for joining us, John. You're very welcome. So I'm not going to go through any big long housekeeping list, but we have muted everyone's lines just for clarity. We have got the Q&A chat open though, so please do engage with us as we go through. If anything piques your interest or you would like a bit more clarity on anything, just drop us a note. I can't promise that we'll get to all of the questions after this session, but if we don't get to your question, I'm very happy to answer it after the webinar, and I'll leave my email at the end as well, so you can drop me a note. Okay, so if I were to summarize the findings of the survey in one sentence, I think what I would say is that we are seeing a new environment where agents aren't just attacking, but they're also doing lots of legitimate things like browsing, collating information, optimizing things for users, buying on behalf of consumers. And what that then creates is a big challenge for businesses to be able to recognize agent and customer behavior and understand whether the intent of that behavior is good or bad. And so, as we go through the course of this webinar, we're going to be unpicking some of those themes and looking at what the stats have shown us from the survey. So, here are some of the kind of key themes that we're going to cover today. We're going to look at the impact that AI has had on fraud, not just from a kind of speculative point of view, but from the cold, hard facts of the survey respondents. We're also going to dive into the world of deepfakes. We're going to look at other kind of interesting attack behaviors and how AI has changed that. Then we're going to look at some of the challenges that organizations face when kind of identifying and disrupting this behavior across the user journey. We're going to look a bit at the kind of risk versus opportunity of agentic commerce. So it's not all bad. It's not all about the attacks. There's also lots of opportunity. So we're going to look at the risks of making the wrong decisions and where businesses can potentially benefit from accepting agentic commerce. We'll look at the financial costs, though, of getting it wrong, according to our survey respondents. And then we'll kind of take a bit of a look into the future at liability shift perceptions, AI readiness, and also what our respondents think the rest of their 2026 is going to look like. Just a note on kind of industries. I'm going to be showing you the kind of broad trends across all industries, but as we go through the survey results, I'll also kind of try and pick out any interesting industry variations. And then towards the end of the session, we've also got some content on industry deep dives, so specific stats across particular industry verticals, which will be interesting to you for your specific industry. What I would say though is if there are any particular industries that you would like to have more context on, then as I said earlier, please do drop me a note after the webinar. I've got all of the raw data from each of the questions, so I can always go in and look at the raw data in a bit more detail. Just a note on the survey methodology, we surveyed 500 fraud, risk and security executives. They were kind of director level and above, so it's not just the practitioners that we're looking at, but we're looking at the people who are directing the strategy and owning the budget. The industry split was across banking and fintech, gaming and gambling, e-commerce and travel. And we also surveyed respondents across the UK and the US. So we've got a bit of a kind of transatlantic story. Okay, let's dive into the first theme then, on AI assisted fraud being the kind of dominant attack vector. So I think for me, one of the most striking statistics from the survey was this 97% figure. So 97% of respondents have seen AI facilitated attacks increase in the last year, and only 5% would consider AI involvement negligible. So what we're seeing is this is fast becoming the kind of the default, not the exception. And that stat surprised us simply by virtue of how high it was. And it's then backed up by the fact that 40% of all attacks are now AI assisted on average across all industries. And 25% of respondents said that AI involvement in their environment already exceeds half of the attacks that they were seeing. And interestingly, travel and hospitality actually indexed higher than any other industry in saying that AI attacks were increasing dramatically and actually made up the majority of their attacks. So that's just a bit of a kind of an industry nuance for you. So, John, let me bring you in here. What do you think's driving this acceleration? It's a conversation that we're having across industry at the moment, but now we've actually got the stats. Is it because the tooling's becoming more accessible? Are the economics getting cheaper? Something else? What's your opinion on that statistic?
I think it's all of those things, right? Like the tooling itself is very much commoditized and it's available to any level of user, technical, non-technical. So that step of fraud orchestration, meaning if you had to maintain a number of different tools in a toolkit for something sophisticated and on the web, be it for an identity flow to get a new account created or anything else, it's a lot easier to keep those things organized, to keep those things consistent when they work, and to track the success rate. So the commoditization of all these different services, particularly something such as cloud, which pretty sure we use, it's enabling bad actors and good, no doubt about it. I think what is particularly interesting about this, though, is there have always been a number of sophisticated scripts and tools out there that could be used by bad actors, but you needed a certain level of understanding of how those things worked, and you had to maintain
Mm,
them yourself. Now you don't have to have that interpretation of how to configure something. You have an agent and a service that can do that for you.
yeah. Yeah, I think that's a really good point. I was at a conference yesterday and there was a really interesting insight around the fact that the person who was presenting was saying that, we often talk about fraud rings and fraud gangs and they're very organized and it's fraud as a service, but actually AI tools are also making fraud very accessible to the one-man band to be able to scale into their kind of their own network and their own kind of fraud play. Um, but likewise, you see it in the on the other side where you might get a group of fraudsters who previously weren't particularly advanced and, to your point, didn't know how to code, and then AI tools now give them all of the tools they need to be able to create this very, very organized and sophisticated attack pattern. So I think it kind of goes both ways that you can kind of see the one man band less sophisticated becoming more sophisticated and also facilitating that kind of that network effect.
Yeah, 100%. And these services are like context aware, right? I think that's actually one of the biggest enablers. It's not only the packaging and commoditization of the tools, where they also become
Mhm.
easier to share, but the fact that these things have an understanding of what's failing and they can learn
Yeah,
from it. Um,
yeah.
in its simplest description, like that's a big unlock. The trial and error is faster, and you can follow the success paths more repetitively.
Yeah. And what about in your environment, John? Like, where are you seeing the biggest growth? And do you think that, do you get a sense that that is AI assisted as well?
Yeah, so Apollo is like definitively AI native, and that's how we build our platform as well, right? We want folks to bring in their integrations. We want them to bring their agents. We have strategically deployed MCPs for every large model provider out there, and that's caused that traffic to explode. I think what's interesting is there's definitely more like we can call it bad traffic, but there's also so much more good traffic on the platform. So it's really interesting. My role is really interesting to be in this environment, and particularly where the last 18 months I've had a front row seat to see how legitimate users of our platform adopt the technology that we deploy and the things that they're building themselves, and then how the bad actors do the same thing. I think we'll go more into this, but one thing that's like leveraged Apollo to be successful in its growth in this space is that we're building tooling and context for the commoditized tools that are used for good or bad, which sort of sets up guardrails for them to follow. So it actually makes it a little more challenging for some of the fraudsters to try to break the platform apart, where the first thing that something like Claude will do is go and inspect the instructions that it has from our platform. It can still try to disobey this, and we can see that. We can see people with certain types of ways they connect, like our own agent, which will do things for them. We'll see them try to prompt inject that and break things apart. But by sort of like getting as far ahead of the curve as we can by having some guardrails, some recommendations, and connecting it to something that already existed, like our APIs, which naturally have some limits, we have some sort of high level understanding of what the maximum exposure can be. But
Yeah.
yeah, everyone's experimenting, and it definitely can at times look like everything's an attack, when really it comes down to intent and how quickly these goals are trying to be fulfilled.
Yeah, and that's a theme that we'll come back to throughout the webinar actually, is this kind of tension between understanding what is legitimate customer behavior versus legitimate agent behavior, and then picking out the bad within each of those buckets. So yeah, I think that's a great point. Okay, awesome. Let's move on to the second theme, which is around deep fakes. So we asked our survey respondents whether they had encountered deep fake fraud in the last 12 months, and a staggering 93% said yes. This one, again, was interesting for me. I remember a Gartner quote a couple of years ago that was talking about deep fakes becoming kind of mainstream in new account origination processes, within the next 5 years. And there was a lot of skepticism around that prediction. So people were saying, oh, I still think deepfakes are an edge case. I don't think they're going to move into the mainstream. But actually, with the help of AI tooling, they are now becoming a reality for the vast majority of businesses. Video deepfakes are actually the most common format, which again surprised me because always assumed that it would be voice because voice is easier than video. But I think actually with the huge and very quick advances in AI video creation, that is very quickly changing. AI generated documents, of course, are popping up everywhere, and that's going to be a mainstay of deepfakes. Another interesting thing about the deepfake statistics that came out of the survey, though, was that they weren't just attacking a moment in the customer journey, but they were infiltrating the entire customer journey. So the top entry points for deepfakes were payments and checkout, as you would probably
Mhm.
expect, but also customer support and call centers at 16%, and then onboarding and identity verification. So again, like probably only 2 or 3 years ago, we were only expecting to see them at certain micro points in the customer journey. And actually, what the survey showed us is that they're already operating right across multiple steps in the customer journey. But then beyond deepfakes, the respondents were also seeing like a general increase in the complexity of attacks. So we saw that 36% are seeing multi-step, persistent attacks that run over days and weeks. So they're not these kind of, smash and grab, they're coordinated campaigns designed to stay undetected. 45% reported fraud as a service kits are improving. And again, deepfakes are massively accelerating the success of those. 42% see better evasion with kind of rotating identity signals and human-like behavioral patterns. And 43% see more targeted contextual scams, which make it much harder to detect those scams. And again, AI is facilitating that kind of increase in sophistication. So, John, what's your view on deepfakes? Are you seeing them in your environment? Is your approach to tackling them different across different channels? Talk to us about, what you're seeing and what your view is here.
Yeah, so maybe we're lucky because we don't really do identity verification exactly like a bank would, and liveliness checks and all of that aren't necessarily a namesake for success paths within our platform. I can say I may or may not have seen some evidence of this being present at times, but like it's not a signal that we would be 100% dependent on anyways. So we're a little bit lucky in that regard. But with that being said, I think just knowing that this is possible, seeing it in the wild across other industries, with my peers who I'm in touch with, and the simplicity of doing so, right? Like, I think there's a lot of folks I know with teenagers, and this is just kind of like part of how they communicate too. It's like deep faking one
Yeah,
another. If it's that simplistic, like you should expect to see it like in your identity verification flow. So, one way that we combat this to a certain degree, like if we really need to get in touch with the true identity holder, we again like might be lucky. We have a pretty high accuracy contact database. It's a fundamental component of our platform. So we know how to reach out to people. And if they're being spoofed and they're in the pipeline for, a sale and a B2B transaction, maybe we just have the opportunity to reach out directly to their known contact information. And we'll know pretty quickly if they're being spoofed
yeah,
elsewhere. That's a pretty high like effort, high friction path, right? You don't want to have to go
mm,
to cold outreach or warm outreach to folks that are in your funnel. But we have that opportunity if we need to. I think that again, you just need to have a lot of context that goes beyond that identity verification step of a liveliness check and a video. I don't think that's something you should be trusting by default to begin with. And I think, again, this is another set of evidence around what's been commoditized. And it's a point in time solution. Yeah,
yeah,
I guess, as you're saying earlier, there could be multiple steps where maybe there's some sort of video required that I haven't seen too often in an identity verification flow. But if your point in time solution is depending on video, I think you need to enrich the model that you're using for fraud detection. I don't think video is a good dependency right now.
yeah. No, I would definitely agree with you there. Okay, cool. So we've sort of covered a bit about the attack landscape. Then we kind of pivoted our questions now to be around how organizations were approaching protections and defense of this kind of new AI threat. Um, so organizations are expecting to see legitimate agentic traffic across things like browsing, account actions like subscription changes, even account updates, returns, price comparisons, as well as checkouts and payments, and even across things like dispute resolutions. But conversely, the vast majority, so 64% of organizations, said to us that they can only defend against potential attacks at a few touch points in their customer journey, or even in some cases, just at one particular touch point. So it's interesting. We're entering this kind of new world where we have agents starting to operate right across the customer journey, bad actors potentially exploiting gaps in that customer journey and that coverage. And yet businesses are still looking at their kind of key risk assessments at isolated moments in time. So there's definitely a bit of a kind of catch up game to play there. And in addition to that, we heard that 50% of respondents to the survey rely on between 5 and 6 different vendor tools across the user journey. Again, kind of creating this potential environment of silos and gaps at kind of every handoff point between those risk assessments. And only 45%, so less than half, said that they had a fully tested kind of incident response playbook for this type of fraud. So the vast majority are still kind of feeling their way. John, does that feel consistent with kind of what you're thinking about in terms of how people are responding to the kind of new attack environment? And how have you handled this at Apollo? How do you kind of prioritize which gaps in the customer journey you close first? And what does your kind of prioritization of kind of filling these gaps look like internally? How could we actually hear your sort of real world remediation strategy, if you like, to this problem?
Yeah, I mean, I would say we have a lot of different tools in a way, and most of them do not have full journey coverage. We do have some that are more holistic than others, and then some that are on more critical touch points. But what I have strategized is take the context that's available between those tools and where possible, feed them into one another. Essentially, what that
Mhm.
means is if I have something on the sign up flow or the payment flow that's making a risk decision, um, that should be able to get context from something else where that service isn't running. And that context should be digestible by that service. That's very high level. I wish I could go into super deep context, but essentially we're running models at multiple
Yeah,
stages, and those models are as holistic as possible because you know fraud programs have really shifted from you need to cover one point, you need to cover multiple points. We're back to one point where we're gathering context from before. We're making decisions as late as possible. We're now making decisions earlier. That way we could lower the infrastructure cost. Um, that has sort of like split into two parts for us where we're really high confidence and we have enough context, we're going to stop threats as early as possible, especially when we know
Mhm.
there's no conversion rate impact. And then for things that we can delay where we need more context, we're going to make that later. As it pertains to the agentic traffic that might be difficult to discern the intent of, I think intent largely means you need more context because
Yeah,
intent can't really be made at the point that something first connects to your infrastructure, to your service. We have to see how they're behaving, what they're doing, what are they reaching for in terms of product utilization? Are they going straight to the most valuable data that our platforms holds at a high scale of requests, or are they doing other things that maybe show some degree of learning and trying to explore before they go for the content they're looking for? So we use a number of different fraud detection services and models in order to get to that high level of confidence. And we're constantly trying to update how we make that segmentation of intent because it
yeah,
changes so rapidly. And it also has to be
yeah,
customized depending how something comes to us, right? I mentioned we have a lot of integrations. Um, but that's essentially how we set this up. We gather as much context as possible. We focus on intent. If intent can be established right away, um, including with prior learnings, meaning a trained model where we saw abuse, then
yeah.
we're going to try to make that decision earlier where that's high.
Yeah, and I think that journey context is really interesting when it comes to agent behavior because actually you're right that a lot of agents are going to jump to certain pages in a kind of digital transaction where a human wouldn't necessarily make that same kind of journey behavior. Doesn't necessarily mean it's good or bad, but actually the important thing is to have the context and the visibility of that behavior from their kind of entry point to their exit point to be able to understand whether you can make a good risk decision on that behavior, right?
Yeah,
Cool.
definitely.
Okay, so let's go on to the fourth theme, which is around kind of agentic commerce, the kind of opportunity and risk. So we've talked a lot about the kind of the risks and the threats, but we also want to look at the trends kind of from the view of opportunity and revenue generation. So according to the survey, 89% of respondents expect non-human traffic to increase in the next 12 months. Again, I was surprised by how high that number is. It's not a future problem, it's a here and now problem. The reason I was actually surprised about that is because at a recent conference that we were at, we were talking to a lot of merchants and they they kind of had a view that, yeah, we think that we're seeing agentic traffic, we think that we're seeing lots of browsing behaviors, but we don't really know how to identify it and we don't really know how to categorize it. So it felt like quite a kind of theoretical problem. But actually, what the survey said was, no, we 100% expect to see this increasing, and it's not a future problem. It's a kind of now problem. I also thought that it was interesting that nearly half the respondents do expect agents to be buying on behalf of consumers. It's not particularly something that we're encountering yet in the UK and Europe because we have different strong customer authentication protocols when it comes to making payments. But it is fast becoming a reality in the US, right? People are experimenting with getting agents to buy on their behalf. But then when we look at the flip side of how, how should we handle this agentic traffic? The market's divided. So this was really interesting for me. 48% said that they would allow agentic traffic by default, with an unknown risk threshold. 31% said they would block by default, so potentially, losing revenue there. And 20% said they would take it on a kind of use case by use case scenario. So actually, this is also quite interestingly nuanced by industry. So for gaming and gambling companies, 66% of companies said that they would allow agentic traffic by default with monitoring. Whereas in fintech, who are possibly slightly more risk averse and more kind of forward thinking when it comes to digital, 42% are saying that they're blocking traffic by default. So that's quite a kind of split view there, right? Isn't it? Some people are saying, yeah, we're going to accept, by default and then take edge cases. Some saying, no, we're going to block by default and take edge cases. The missing piece of the jigsaw for us here seems to be about developing the solution that can recognize and risk assess both the kind of human and the agent traffic across the customer journey, as we said. What's your view here, John? What do you think about the kind of block by default posture? Is that sustainable long term, as agentic traffic grows? What's the
I
risk as well?
I think there's a lot of business risk there. I think that, I have spoken to a lot of executives in the last month in particular, right? And this is something that's like our leadership is really trying to facilitate. They want us to have this awareness and conversation. I think that that's pretty short-sighted. I think if you are in like a block first principle approach with this, you risk losing tons of market share. And the early
Mm,
adopters might be the ones generally right now that are using agents to complete tasks for them. But in the not so distant future, it will be the norm. Um, do I think that means that everything will be an agent, right? No, I think there's a lot of hesitancy from especially the US population, according to your research, that people don't want agents necessarily making all or most of the purchases for them unless they have really strict guidelines around that. But for you to be within that population of merchants who accept that type of traffic, I think that's wise. I think there is a little bit of risk, but that's where you can do a degree of step up, based on where your payment service provider and where the card networks, if it's a card payment, maybe provide you some degree of liability shift. That's where you investigate. Okay, well, how do I get, the agent 90% there? Maybe 3DS is going to
yeah,
be required or required over a certain dollar threshold, which in theory should have the human step in to participate with that agent in that flow. And even if it
yeah,
doesn't, it may be, from a compliance or mandate perspective, like there should be some degree of protection for you as a merchant. So you
yeah,
have to think about how far can the agent actually get before they're really not supposed to do it, right? To do anything else. I mean, in fintech, it makes sense that there's more hesitancy there, but I think still like product exploration, maybe, not applying for a $30,000 loan, but getting a preview of loan products with sort of generalized information around the profile of the credit holder, like getting that sort of research done by an agent
mm,
unlocks the opportunity for someone to step in and finish the flow and do the identity verification. So I don't think a block first approach is going to be advantageous to products that are on the internet
yeah.
for much longer.
Yeah, I 100% agree. And I think it's a risky strategy when we'll go into it on the next theme when you see the impact of getting it wrong on kind of false positives and defection of good customers to competitors. So nice segue into the sort of true financial cost of kind of the AI fraud and the false positives. So the survey showed us that $4.5 million was the average annual direct cost from AI-enabled fraud per organization. And conversely, 3 million is the average revenue lost per year from false positives alone. So, legitimate customers being declined, blocked, abandoned due to the friction resulting in, getting the AI decision wrong. So this means the total annual exposure is exceeding $7.5 million per organization, which is interesting to compare when you look at, say, what the potential fraud budget is for that organization. John, I think the kind of false positive cost is quite interesting, right? Because it's often an invisible cost in reporting, isn't it? It makes it hard to build the business case when that number is kind of consistently underreported. How do you do that in Apollo? How do you kind of account for that potential underreporting in the kind of risk of getting it wrong and, inconveniencing good customers and the potential that they might churn to a competitor if you're kind of consistently making the wrong decisions?
Yeah, well, hopefully not consistently making the wrong decisions. Like this is a data first environment, and the backbone of the programs that I run, and that Apollo requires us to run. So everything gets back tested so that we have some historical context onto how something will perform, whether that's a human doing the analysis or if it's automated before it gets promoted into production as a control or as a flow change or even a feature change. That said. Um, I think it's getting a little harder because the loop of that testing is getting tighter and tighter, right? So let's talk about a few years ago. If you had like an ID verification flow for creating a new account on some platform, fintech beyond, like you'd be able to take 6 months of data to get a rough understanding of how a change would perform in production if you deployed it in that way, assuming you had the data available. Today, like if you're in an agent first environment where the models are changing rapidly, the behavior of the agents is changing, and then all of the local agents that are being used by essentially the operators, almost like a web client, those are all different. So the agent might, declare itself as the same, but the instructions and the scripts that they have locally can be completely different. They're using different skills or whatever it is on each of these devices. So like when you backtest, A, you're backtesting not 6 months because that data is too old, but also B, like the diversity of the behavior is going to just be absolutely radical on the platform.
Mm,
So it's a lot harder
mm,
to do the back testing. I think what we do more testing now is beyond just A/B testing, more like ABCD testing, where we will have some sort of proposed change and we'll try to really rapidly prototype it, get it out, see how it performs over the course of a few days or weeks, and be ready to roll that back if it's not working out. But also by
yeah,
just running more tests, even in production, we're able to get a better understanding of what the business impact will be if we're going to put in a different rate limit, a different control, a different path, even a
yeah,
different instruction set in our MD files, which is what the agents are supposed to follow when they connect to us. So
yeah.
it's very interesting. I think we're doing more testing, not less, to try to avoid false positives. And we're in a hyper vigilant, no false decline environment, maybe the strictest I've ever been in. So that makes it hard, but it also really helps us skill up on how we operationalize this.
Yeah, I think that kind of constant test and learn, and being willing to roll back things that haven't worked is, yeah, that's a good strategy. Okay, cool. So we're going to go on to the last kind of core theme of our webinar now. So before we take a kind of quick look at industry trends. So I think this is probably one of the less surprising stats given everything that we've just discussed, right? Happily, 95% of our respondents have agentic AI as a top five priority on their 2026 security and fraud roadmap, and actually 46% rank it as their top three. I was quite surprised that that wasn't higher, to be honest, but maybe it's kind of catching up. But when it comes to liability, this is somewhat unresolved. So 39% of the respondents said that they felt that the AI agent provider should bear the liability for when agent-driven actions go wrong. 20% said the customer should bear the responsibility. 15% said it's scenario dependent. 14% said the business should bear the responsibility, and 11% said the bank or payment processor, presumably when it was an agentic payment. So there's kind of no clear consensus about where the liability is going to sit. And obviously, we haven't really got a regulatory framework in place yet. And then when it comes to the kind of top blockers that businesses said they were coming up against when it came to safely embracing agentic commerce, I would say these were kind of quite overlapping across two core themes. I think that it comes down to understanding agent intent, which we've already talked about, and then managing the customer's role in that kind of agent delegation and authorization process. John, how do you think the kind of liability frameworks are going to evolve over the next 2 to 3 years as
Oh
agents
man.
become kind of mainstream? It's a big question, right?
Yeah, it's huge and it's such a great question for like a big audience or bigger audience. So I was lucky to go to a CISO offsite event a few weeks ago, right after RSA. And I asked that question to a room that included several AWS deputy CISOs and some other folks that I probably shouldn't have been sitting near. And I asked the whole room, right? I was like, who's going to build the like identity framework that we can actually trust? Who's going to build the transactional system where there's like a certificate or some sort of method of authenticity and authorization that these agents can use on behalf of their human operator? And everyone is like, we have no idea. It's got to be a big player. I was like, okay, well, like some of you are at some of the biggest companies in the world and could facilitate this. Like, is that on your roadmap? I think even those organizations aren't sure of where this should
Mm,
live. Um,
mm,
I won't name them, but one of the inventors of DNS and like some of the biggest standards in internet was in the room, an idol of mine. And I was like, well, you sort of set up this standard. And back then, the internet was on, the verge of becoming a public thing. Maybe there's like a standard that needs to come out. And from my point of view, I think that's what it needs to be. I think there needs to be
yeah,
maybe some of these big AI companies, they need to participate, but also in conjunction with some of the CDN providers or infrastructure providers. I could imagine AWS, Cloudflare, OpenAI, Anthropic, and maybe even some like on the payment side, some of the financial institutions. I would hope they could come together and essentially build some type of standard. What I think will happen though in the near term, I suspect that it'll be pretty fractured. I think they'll each come
mm,
up with their own protocol, trust protocol, and that is something that you'll need to try to support as a merchant or as an organization that supports agentic connections. And you'll be
yeah,
incentivized to do that, right? Because as the population normalizes making payments via an agent or an agent making a payment on behalf of them, an agent going and creating and managing accounts for them. I think what likely will happen is probably the biggest model builders, OpenAI and others. I think they'll come up with protocols and that you'll be
yeah,
incentivized to integrate them. It'll be sprawl, right? If we don't have
yeah,
a true
yeah,
protocol across providers, it's going to be a little bit hectic. It's going to be painful, but
yeah,
that pain might need to be felt first before we actually have a true standard that comes out like in the networking
yeah.
similar.
Yeah, I 100% agree with you. And I think, regulation is fast following, right? So I think we are entering that brave new world in the next few months. So yeah, it'll be interesting to see where that gets us. Okay, cool. Just moving on to the last section of the webinar then. We pulled together some kind of key industry insights to give you a bit of a flavour for how your industry compares to the overall trends. So I'm not going to go through these in masses of detail, but wanted to pull out a few key highlights for each of the industries. But as I said, if there's any particular industry that you're interested in, you would like a bit more of a flavour, do drop me a note after the webinar. So banking and fintech. Deepfakes featured more prominently for banks and fintechs, as you would probably expect, reflecting the attempts of fraudsters to kind of bypass stricter, KYC measures and authentication protocols. Interestingly, voice cloning was fintech's number one attack vector. I guess that's probably speaking to the kind of mobile first conversational channels that they've built for kind of customer convenience in fintech. Banks specifically expect the highest share of browsing traffic. Again, I thought this was fairly logical. It's kind of indicating to me that although banks are kind of less concerned with agentic payments at the moment, they're going to be seeing a greater impact of AI agents influencing customer purchase decisions when they're looking for kind of best loan rates or best mortgage rates, that kind of thing. Fintechs score really highly on having journey-wide fraud protection in place. So 49%, I think that's significantly higher than other industries. But obviously that makes sense, right? Because they've been brought up in the digital era, and so they've been brought up to protect the full customer journey. I think banks with their kind of legacy bolt-on solutions and kind of more of a patchwork quilt of solution providers may be at a potential disadvantage as agentic attacks scale. And I think that probably translates into the next stat around 52% of banks are saying that they can't tell good agents from bad, which is the highest of any sector. So again, that's a kind of really key challenge for banks to solve. Moving on to e-commerce and marketplaces. So here, 57% of respondents expect agents to be doing price comparison and deal finding, which again is the highest of any industry. So it looks to us kind of the sort of era of agent as shopper reality is already here, distinguishing a customer's agent from maybe a competitor's scraper or from kind of fraudulent activity is going to be the core challenge here. I think the other interesting point for me here, though, is that e-commerce merchants are most concerned with the kind of consent and authorization trail that they need to solidify before they feel they can accept agentic traffic. So that was at 44%. So really, they're looking for that kind of clear answer between did the customer authorize this transaction? For gaming and gambling operators, as I mentioned earlier, 66% of gaming and gambling operators allow agentic traffic by default, which was the most permissive posture of any of the other industries that we surveyed, 18 percentage points above average. Only 22% block by default. And then 60% say fraud causes churn in between a quarter and a half of their impacted accounts. So I think what that showed me here was that, that was the highest for any industry. And it kind of points to the fact that, gaming and gambling spend is potentially discretionary spend for a customer. So that kind of erosion in customer trust when things go wrong has a greater impact in gaming and gambling than it might do in some of the other industries. And it has a kind of very measured consequence on customers defecting. And then almost 50% cite social engineering as the fraud typology that they see as most vulnerable to AI influence, which again I thought was interesting in the context of kind of gaming and gambling, persuading people to divulge their details and that kind of thing. And then final industry spotlight that we did for you today when it comes to travel companies. So AI had the biggest impact here on payment fraud, account takeover, and refunds and returns. And 33% of travel respondents estimate that again between a quarter and a half of their traffic is non-human today, which is really high. So 10 percentage points above average. Again, I think, the travel industry has had years of kind of scraping, seat holding bots, loyalty farming, which is driving those high baselines of kind of non-human traffic already. And Agentic is only kind of increasing that likelihood of that traffic growing again. 30% say more than half of their attacks are AI assisted already, which is 9 percentage points above average. And travel actually sees AI as the dominant attack force and not as a kind of emerging or growing one. And then finally, in travel, 28% said that the customer should bear the liability for agent-driven transactions that go wrong, which again was the highest of any industry, which is an interesting one to finish on. Cool. So that gives you a bit of a flavour for kind of just some industry nuances in the results of the survey. I just want to kind of bring some of these key themes to a close now as we finish the webinar. So, really, what we've heard from the results of the survey is that the key question that every fraud and risk leader is going to need to answer is the ability to understand who or what is transacting on their website and what is their intent. And so, some of the kind of strategic priorities that we would recommend you guys considering are looking at how you can close the customer journey gap. Products like Darwinium offer a solution to this. So, a very brief summary of our product. We deploy at the perimeter edge so we integrate with your content delivery network to provide complete visibility and context of all of your human and agent traffic at every step in the customer journey. And what this allows our customers to do is to move beyond just kind of detecting the identity of a user or the identity of an agent to really understanding their intent and their behavior as they transact across your website. And then finally, organizations we think need to look beyond just the cost of fraud, but also the cost of false positives if they make a wrong call. So, John, maybe just to kind of bring the webinar to a close, we could briefly discuss what does a kind of an agentic ready fraud stack look like to you? And if you had one piece of advice for the people on the call today, in terms of what they need to do in the next kind of 60 to 90 days, what would it be?
Yeah, I'll touch on a few things. I think there's still more work for my program and Apollo to do to really be, in the ideal state. We're maybe ahead of the curve in some ways, but it's not perfect. So this advice probably will change within a month. But I think where I would start as an organization is like we talk about good and bad traffic. If you are seeing automated and scripted and agentic traffic, which can look pretty similar currently, if you're seeing that and you're not sure what its intent is, start by trying to set a good intent path and a method of availability. Work with your product and engineers, work with those teams so that they can have something in front of these agents where it's guidance on how they're supposed to behave, right? Like you need documentation actually that's agent readable, as crazy as that sounds. It's a little different from human readable, or if you make it the same, you have to tailor it for the agent. So make it so that they can interpret that and they can operate within the guidelines of what you want them to. Align that with your TOS as well, right? Like if there's an
Mm,
off limits area, make that clear in the documentation. And then suddenly if you've done this effectively, you can then more confidently say the traffic that's present on this path or endpoint or part of my product where it's supposed to be disallowed. I'm more confident now that, whoever's bringing their agent to the platform failed to read the documentation just like a human would, and therefore I can do more aggressive restrictions around it. For where you do need to offer restrictions, see if you can have an alternative path available, right? There's a lot of product work involved in this. I think most fraud practitioners, technical or not, they work with their product team. And I think these are the types of things that they have to design for. Um,
mm,
it's very much like a playground with no rules. Everyone's platform is a playground right now, and if there are no rules, the kids aren't going to follow them, and they'll still break the rules if they have rules to follow. But at least the good ones are the ones that are good listeners will follow some semblance of the rules. So I think that's actually a really good baseline to start before you start really like diving in or making a judgment. Secondly, as we discussed and probably could discuss more, it's really about intent. So
yeah,
now that you've got those good agent flows available, you can start to typify how they're operating. You can see if they're following your rate limits and your other restrictions, and you can start to hunt down those that might have more negative intent. You can classify them, right? You can then look for the patterns in their behavior, how long it takes them to move between steps, what types of things they're doing on each. If they're testing for something that, has to do with your pricing model of your product, or if they're looking at too many things too quickly. There's a lot of different ways specific to your business that you can build around that, and it has a lot to do with intent. I think those are the two most major things. Um,
yeah,
and if you don't have good visibility across your platform, like raw web request logs, if that's not available to your data science team or your analysts for them to do the threat hunting they need to do, then that's something you need to get on. Lastly, I think, as part of your business case for investing in tooling here and your program, there's not only the market opportunity of capturing more revenue because this is a big chunk of the internet and how it will continue to grow. Um, there's also just the fact that like there's a lot of wasted infrastructure and there's a lot of wasted time
Mm.
where these services are not operating in the way that they're supposed to. So if you can
Yeah.
calculate, how much has that web traffic increased? We were talking about that. How much does that cost your infrastructure team? How much is that costing your operational team and your on-call team? All of that really matters because you can use it
Yeah.
as a business case to deflect the bad traffic and capture the revenue from the good traffic. And that can go
Yeah.
directly tooling. If it's costing you $10 million a year in CDN costs when it really should only be five, hey, maybe there's a $5 million opportunity or $1 million opportunity there for you to get a better fraud tool and behavioral analytics tool in the door. So lots to
Yeah.
do. You're going to also need
Yeah.
partners that can innovate. And lastly, if you're lucky enough to also run an application security team, your developers and engineers are going to be making product features faster than they ever have before. So on the security side, you also really need to get ahead of that. You need to be able to review code faster and detect vulnerabilities. That also impacts the fraud team. So don't forget about that.
Awesome. No, that's great responses, John. Thank you. Just as you were talking, I just had a quick look at the Q&A panel, and we did have three questions that came in. So maybe I'll ask you the first one, which is around, what are the signals that you use to help separate between good and bad agentic traffic? So, like, I guess what we've talked about is quite a theoretical challenge of saying, hey, these are good agents and these are bad agents. But when it comes to your practice, what are the actual signals that you're looking for to say, I think this might be doing something okay and legitimate, and I think this might be doing something risky?
Yeah, I'll give some really high level feedback to that because this is pretty strategic, but this should be actionable for you. Like error rates, right? So there's session context that still exists for an agent. It's not a new agent every single request. That would be pretty strange. And that could maybe reset intent to a certain degree. There's like session continuity. So when the agent comes to the platform, a good signal would be, okay, it's checking out the MD file, it's downloading it, it's requesting that before it does things if it's the first time that we've seen it, or if it's the first time that we've seen it within the tenant of the account that's being used as
Mm,
part of authentication, which of course can be multiple ways. It could be OAuth,
mm,
could be API key, could be other things. So if it's like sort of following that directive, that's a good first step. There might be a little bit more
mm,
positive intent that's expected from them from it. I don't want to give it a name. Uh, Secondly, about error rate, right? Like you're also just going to have a higher error rate if you don't read the instructions first. Like if you put together your IKEA furniture without reading the manual, it's going to be a bad time. Same for the agent. So if it's getting a bunch of, error codes, HTTP error codes, and that incrementally goes up during the session, they could be
mm,
trying bad things, right? Even if they're
mm,
learning and they're distributing tons of agents against the platform to like really reconnaissance typify how things work, they're still going to hit a ton of different errors, and then the behavior will be similar until they get through each gate or each path, right? If they're looking for the ceiling of the number of limits they can get through, they might test way too many and it'll get smaller and smaller and smaller. And the intent is already bad because they failed. So we can dynamically look for things like that. And obviously, there's like so much noise and so much data and so many signals. There's not a human being that's sitting behind the computer building all this stuff, right? I can only work 12 to
mm.
14 hours a day. So we have models that help us with this stuff.
Yeah.
If you can bring those into account and then you can expand that again across the steps and the sessions, you essentially have like this dynamic score if you want to bring it back to a score like a lot of fraud decision makers like to use. And that can be dynamically changed and it can be correlated back to intent. So those are some of the signals that I'm looking at. Not really looking at user agent too confidently. That's really not something that I trust too much.
Yeah.
But we see ebbs and flows in these behaviors, and those behaviors are what let us typify intent.
Awesome. Cool. Well, I think we've got time for one more question, which was just about a question around edge deployment and what that means and why CDN is interesting, which I can start and you can chip in, John. So Darwinium has an interesting deployment option where you can integrate via your content delivery network. So your Cloudflare, your AWS CloudFront, or your Akamai integration. So rather than sitting as a piece of JavaScript on individual web pages, we integrate right in the front of your web traffic using some technology called edge workers, which all of the CDN providers have. And via that integration point, we can then very easily profile and track user behavior right from the moment that they land on your site, even kind of pre-authentication at kind of browsing behaviors, all the way through to every interaction that they make on your site. And if you want to configure a new touch point within that customer journey, it then becomes a very easy kind of capturing the URL and just putting it into the Darwinium portal rather than a kind of big code change on your web page. So it's a really interesting deployment option. It allows us to deploy very quickly to protect the whole customer journey and also benefit from the kind of resilience and scale of the CDN network providers who are operating globally. So again, if you want to know a bit more information about that, I can definitely send some to you after the webinar. John, anything to add on that?
No, I mean, I can't imagine, again, right, being in a rapidly changing environment, I can't imagine maintaining a bunch of manually integrated things with tags for each step. So a CDN deployment allows more deployments to be made more rapidly from a third-party tool, particularly if something needs to load on the client, which is the device that connects to your site. And that's why we use a CDN to deploy the client loading and client contextual fraud tools.
Yeah, awesome. Okay, cool. Well, we've come to the end of the hour. Thank you very much for joining us. I hope you enjoyed the webinar. My details are on screen. Please connect with John and I on LinkedIn and hopefully see you again soon. Thank you, everyone.
Cheers.